Hello everyone, and welcome back to the channel. Today's story is not just about trade wars, tariffs, or politics. No, what we're talking about today is a full-blown financial war that is rapidly escalating and threatening to reshape the global economy. For years, the United States and China have been battling each other with tariffs, sanctions, and technology bans. But now, the war is moving to a whole new battlefield. This isn't just about semiconductors or TikTok anymore. It's about the very foundation of money itself. It's about debt markets, currencies, and who will control the global financial order in the future. And make no mistake, this is not a minor skirmish. This is financial warfare at the highest level, with both sides pulling every lever of economic power they have. So, let's break it down step by step. It all started with Trump's decision to extend tariffs beyond steel, aluminum, and microchips. He's now targeting something as basic as furniture. Chairs, tables, sofas, you name it. At first glance, it seems almost trivial. Why would the White House care about taxing foreign chairs? But in reality, this is a symbolic escalation. It shows that the US is willing to extend tariffs into consumer goods, into the everyday lives of Americans. And it tells us something even more important. This trade war is not winding down. It's heating up, China noticed. And unlike previous years when they simply responded with counter tariffs, this time Beijing is playing a much deeper game. Instead of just slapping tariffs on soybeans or corn, China has turned its eyes to the real jugular vein of American finance, the US bond market. You see, US government debt is the single largest investment pool in the world. It's considered safe, it's considered liquid, and above all, it has been the backbone of global finance for decades. Countries, corporations, hedge funds, all of them park their money in US treasuries because they trust the dollar. But here's the problem. America has borrowed so much for so long that cracks are beginning to show. Every year, Washington has to issue trillions of dollars in new debt just to keep the lights on. And when your government keeps borrowing endlessly, investors eventually start asking uncomfortable questions. Will the value of the dollar hold up? Will the bond itself be worth anything years down the road? And right now, we're seeing those fears play out in real time. Long-term bonds, 30-year notes in the US, the UK, and even France have yields so high that they've actually topped the returns of the S&P 500. That's insane. It means investors are basically saying, we don't trust your government's debt anymore. We'd rather gamble on overpriced stocks than hold your bonds. Think about that. The so-called safest assets in the world are now seen as less attractive than stocks trading at bubble valuations. That's how deep this collapse in confidence has become, and the timing is no coincidence. This spike in yields is happening in 2025, exactly as tariffs rise, trade walls go up, and Western governments are forced to borrow even more money to offset the economic damage. If you're holding long-term Western bonds right now, you're staring down the barrel of a double disaster: rising yields that destroy the value of your bond, a falling currency that erodes your returns even further. That is the nightmare scenario investors are waking up to. And here's where China steps in. Beijing isn't just defending itself, it's going on the offensive. Chinese companies are launching massive IPOs in Hong Kong and Shanghai, siphoning billions of dollars of investment away from Wall Street. Take Zijin Gold's IPO, for example. It raised $3.2 billion, but the demand was so intense that shares skyrocketed 68% on launch. That's not just a success, that's a statement. Every time a Chinese company lists at home instead of New York, it chips away at Wall Street's dominance. And Beijing knows this. They're globalizing their companies, expanding their supply chains across continents, and creating investment opportunities that rival or even outshine American markets. Meanwhile, the US is moving inwards. Trade barriers, restrictions, isolation, less globalization, fewer companies expanding overseas, and slowly but surely, the reach of the dollar is shrinking. And that brings us to the heart of the issue, the US dollar itself. According to Apollo, every 10% drop in the dollar's value adds 30 basis points to inflation. Think about what that means. As the dollar weakens, everyday prices climb higher. And when inflation rises, investors demand higher returns on bonds. It's a vicious cycle. A falling dollar leads to higher inflation. Higher inflation pushes up bond yields. Higher bond yields crush bondholders. And all the while, global investors lose faith in the US financial system. So what do? They look for alternatives. And China is more than happy to provide one. Beijing has spent years preparing for this moment. They want the renminbi, the RMB, to become a true global reserve currency. And Trump's tariff war has given them the perfect opening. Already the renminbi has risen 2% against the dollar this year, even as Chinese exports surge. In other words, a stronger yuan isn't hurting demand for Chinese goods. In fact, cross-border settlements in yuan have exploded, hitting nearly 1.66 trillion renminbi. That's an astonishing number. And here's the key. Once you start trading in yuan, you're more likely to invest in yuan assets. Chinese bonds, Chinese deposits, Chinese stocks. This is exactly what happened with US Treasuries in the 1980s and 1990s. Foreigners started trading in dollars, and before long, they were piling into US debt. Now the same growth story is unfolding in China. China's onshore bond market is already worth over $25 trillion. It's the second largest in the world. But here's the kicker. Only 3% of it is owned by foreigners. That means the upside is enormous. And Beijing is solving the one weakness that held them back: liquidity. For years, investors avoided Chinese bonds because they weren't easy to trade. Unlike US Treasuries, you couldn't just buy and sell them at the snap of a finger. But that's changing. China is expanding its repo market, linking up with Hong Kong, and making it possible for central banks, sovereign funds, and commercial investors to trade yuan bonds just as easily as treasuries. In other words, Chinese bonds are becoming liquid, flexible, and globally accessible. That is a massive threat to the US dollar system. So, let's recap. The US dollar is losing value. US bonds are losing demand. Inflation is rising, and global investors are starting to diversify into Chinese assets. Add it all up, and what do you get? The perfect storm for Washington. Trump thought tariffs would cripple China. Instead, they've accelerated Beijing's rise as a financial superpower. And let's not forget America's allies. Trump isn't just squeezing China. He's demanding hundreds of billions of dollars from Japan and South Korea to fund US projects. Japan supposedly pledged $550 billion. South Korea, another $350 billion. That's $900 billion in total. Nearly $1 trillion flowing into Washington like tribute payments to the Roman Empire. But there's a problem. Neither Japan nor South Korea can afford it. For Tokyo, $550 billion is nearly half of its foreign reserves. For Seoul, $350 billion is over 80% of its reserves. To cough up that kind of cash, they'd have to sell US Treasuries. Ironic, isn't it? And the backlash is already brewing. South Korea's national security advisor flatly said the pledge was unaffordable. Japan's leaders are warning they won't bow to unfair deals. Even America's closest allies are resisting. Trump may want tribute, but he's not an emperor. And the modern world is not ancient Rome. So, here's the big picture. China is draining money from Wall Street. The US dollar is losing credibility. American allies are rebelling against financial demands. Trump wanted to strengthen America's position. Instead, his strategy may be backfiring. The US is isolating itself, while China globalizes. The US dollar is weakening, while the renminbi strengthens. And the rest of the world is beginning to ask, do we really want to keep funding America's debt forever? This is financial warfare. And right now, it looks like Washington is playing defense while Beijing is playing offense. So here's the question for all of you. Can China truly replace the US dollar as the backbone of global finance? Will investors really trust Beijing more than Washington? And will Japan and South Korea cave in to Trump's demands, or finally stand their ground? I want to hear what you think. Drop your thoughts in the comments below, because this is not just economics. This is the future of power, money, and global order. If you found this breakdown useful, don't forget to smash that like button, subscribe to the channel, and turn on notifications so you don't miss our next deep dive into global finance and geopolitics. Together, we'll keep unraveling the truth behind the headlines. Stay safe, stay sharp, and I'll see you in the next video.